Thank you so much for choosing to watch this video. You can also catch it as a podcast, an article or transcription on cruxinvestor.com. And of course, for our Crux Investor Club members who will be getting this exclusively as of next week, you can also get company reports in there, training videos, summaries of all of our interviews, plus commentary from people like Mark on macro subjects from all around the world. We spoke earlier today to Mark Selby, who is a nickel market commentator. He's also CEO of Canada Nickel Corp. We talked to him this week about the price of nickel. It shot up again, hitting $7. Quite extraordinary times. We look at the fundamentals and momentums which are driving that at the moment. We also talk about specific companies, mostly some of the companies that Mark likes and the reasons why, and some of the things that you as an investor thinking of investing in nickel should be looking for, both positive and negative. Hope you find those useful. There's a few other things to discuss, so take a look in the description below at some of those. Anything interesting in particular, click on the number beside that topic. That's a timestamp, and I'll jump you through to that part of the video. Otherwise, sit back and enjoy what Mark has to say. Mark Selby, how are you, sir?
Excellent. Another exciting week in the nickel market.
Seems to be. So where are you today?
I'm in Timmins. I'm up at our project site. So it's the second time I've been up here since COVID. So it's good. We're drilling. The things have dried out enough in the area where a project is. So there's some areas we weren't able to get to. So we've completed drilling underneath this really good PGM intersection that we hit. And then we're going off to drill some other nickel targets as we're getting our resource finished here. So, yep, no, it's good to get up to site once a month or so.
Yeah, cool. So tell me a bit about Timmins, because it's a huge mining camp, right? There's a lot of companies, a lot of mines in there. What do you have to contend with in terms of weather? Because you talked about it was wet. Is there cold as well? I mean, what are the conditions you have to work in?
Yeah, no, and this is pretty classic, sort of what you see in Sudbury, Timmins, the Abitibi region in Quebec. So you have, hot summers, sort of 20, 25 degree summers, but then you also have, cold winters, minus 25, minus 30. Again, since most of mining happens in that kind of temperature range, there's no real issues, mining underground or open pit in those conditions. Again, as you go further north, you can get up to, minus 40 degree temperatures for extended periods of time, but, we don't have to contend with that. The one issue in this area, and it extends over into the Abitibi area, is this particular part's very flat, and was part of the bottom of a glacial lake for several thousand years. So there's a large thickness of swamp on top of it, of swampy material that's been logged multiple times. But it just makes it difficult at certain times of the year to pull drilling equipment through it.
Okay.
So, and unfortunately, it was a wetter than average spring and early summer here. So
okay, so I've never been up there. So it's always interesting to understand the sort of the geology and the physical structures there, but maybe one for another time. Here to talk about nickel. Weekly catch up on nickel. The price has done it again. What's happened?
Another milestone has come and gone in this rally. Yeah, we're up over $7 a pound. We're actually getting close to almost $16,000 a ton. This time it was a tag team effort. I've talked about momentum, fundamentals, and technical, and generally a lot of the moves have either been kind of one or the other. But today, over the past week or so, what's really propelled it forward is there's a private industry PMI out of China called Caxton. I'm not sure if I'm pronouncing it properly, but it showed it was very positive, and again just reinforces the fact that the reflation trade that's happening in China that's been pushing the momentum buyers into the metals is sort of continuing to broaden out. So it's not just the SOEs. You're seeing sort of the broader business base feel more confident about the economy. So that news coming out basically gave the chance, for the those kind of buyers to basically bid the base metals again. So you saw copper move up. You saw a bunch of other metals move up, and nickel moved up pretty dramatically. And then on top of it, there was some, again, continued strong fundamental news, out of the market. You had, ore inventories. Again, this is the time of year that ore inventories need to build up ahead of the Philippine rainy season. Ore inventories actually dropped, even though Philippine ore exports, did show a pretty good year-over-year number. And so that just reinforces how strong nickel and stainless steel demand is in China. And again, we're seeing the entire sort of supply chain for nickel and stainless do well. So ore prices are up. NPI prices are up. They were trading at a discount to the metal. Those have now closed, and stainless steel prices are continuing to move higher. So, other news flow on that front, has basically also helped push nickel, even move further than some of the other base metals have. So it's great. And it's actually, again, all the numbers are pointing in the right direction. There's some news coming out that maybe some of the larger NPI stainless players are stockpiling some of their own NPI to tighten up the market. But we'll see. Again, the thing I would have investors do is focus on nickel pig iron prices, because that's, in terms of the three legs of the stool that are most likely to sort of crumble, would be NPI supply out of Indonesia. And if that starts showing up more than the market can consume, it'll get reflected in those NPI prices relative to the nickel prices. But so far, everything's pointing in the right direction. So I think if that continues, we'll stay up at these levels. And again, I did not think we would be here 3 months ago.
Okay, so I mean that's pretty interesting. And what's happening as a result of these fundamentals, this momentum, is that a lot of nickel companies are seeing heights that they've not seen in a long time before, attention being given to them, which they've not had for a long time. And as a consequence, they're keen to put a lot of news out there. We're seeing a lot of news flow. I couldn't help but notice of Legend Mining and Blackstone Minerals in particular. And what do you think of what they're telling the market?
Yeah, no, I think, again, the thing that's nice is with the spike in prices and sort of the Elon Musk sort of larger theme, it is getting a lot more investors to look at it, before people talk about the medium to long term. But the reality is a lot of investors need to see what's happening short term to feel confident to step into a story. And now with this big spike in nickel prices back up to $7 is putting nickel back on a lot of investors' radar. So yeah, no, Blackstone, Legend continues to get higher grade intersections at their property in Australia. Fundamentally, we need lots and lots of new projects to be able to meet the nickel demand that's coming down the pipe here. So Blackstone Minerals is great. I don't think we've really talked about them before. It's a past producer in Vietnam. They picked it up a few years ago. They've been drilling and continue to get decent intersections. This was not a large mine, but a very profitable mine at the right nickel price. And they're continuing to get exploration success on these new structures. The other part that's a fundamental shift from where this mine was before, and hats off to these guys for getting the deal done, was they did a deal with EcoPro, who's one of the Korean EV supply chain participants, who's an up and coming player in that space. And that mine was always hobbled with a 25% export duty that the government had placed on any shipments out of the mine there, and that really took a lot out of the economics. And so EcoPro is looking at putting a sulfate plant in country, which would then allow them to avoid having to pay that 25% export duty. So yeah, no, it's definitely an interesting story with the exploration results coming through fairly consistently, and then the potential from this new downstream plant. So that's definitely one to keep an eye on. And again, I'm glad there's some more new nickel sulfide targets out there.
So questions sent in actually by your followers, which is, what other companies are compelling you or compelling to you in the nickel space at the moment? Obviously, you've mentioned Blackstone Minerals there with their Vietnamese asset, but what are the other names?
Yeah, I think from a risk reward perspective, at this point in time, I think in terms of the higher grade nickel sulfide projects, you see Centaurus Metals out of Brazil. They picked up a property from Vale, who just couldn't get it to the scale that sort of would meet Vale scale requirements. And again, there's a long room from zero and tens of billions of dollars, so you can have a very sizable nickel project. And so these guys have been focusing on the higher grade. They've got some very good drill results. It's kind of a unique type of nickel mineralization. But from everything I've seen and given the location that's there, if you can open pit mine 1% nickel at a reasonable strip ratio, and you're in a good jurisdiction, like Brazil's on top of the list, but they're in a mining area in Brazil. There's no reason why you couldn't see that one advance towards production. So that's in the higher grade camp. That's definitely a great play. the other ones in terms of people who want to pick up on the net zero nickel theme, there's a handful of projects out in British Columbia that have been advanced to various stages, like Giga Metals and FPX, who have large lower grade mineral resources that are again hosted in the same kind of rock that we have at Crawford, and so those stocks have had a tremendous move in the last week or two, but there's still a decent valuation gap versus where we are at Crawford. So again, if you believe in the EV theme, and they are one of a handful of advanced stage nickel projects of any scale. So again, it's always good to sprinkle a few seeds if you're an investor, across a bunch of targets, to play a particular theme. So don't bet it all on one company.
Well, absolutely. So if you're into nickel, absolutely to spread the risk.
Yeah, and another group of nickel companies we've been talking about, the earlier stage exploration companies, is you've got basically a bunch of producers and production restarts. So Western Areas has been the go-to nickel stock for a long time. It's been the consistent producer for the last 10-15 years, and so for a lot of investors, that is a go-to nickel stock as a producer. You have Poseidon Nickel and Mincor. Mincor is in the process of restarting a bunch of smaller high-grade mines. They've made a new discovery down in the southern part of their holdings, and they're looking to restart those operations over the coming year. The other big story that's, again, a production restart, but they're making some pretty interesting and some very high-grade nickel results, is Poseidon Nickel. This mine was one of the highest grade nickel mines that operated ever. And they've come up with some new targets and are generating some pretty sexy intersections in terms of grade and width that they've come through. So again, if you want a mix of exploration, earlier stage exploration and development, sort of mid stage development, production restart, and then the producers, these Aussie names are all good. And then you've got the very large cap nickel mines, which is effectively a proxy stock on Tsingshan's Indonesian operation. So at a $1.5 billion market cap. So again, there's those are a whole series of different ways that you could look to play the nickel market as things evolve here.
One of the other questions sent in was about sort of carbon sequestration, so carbon capture, which you're talking about with your net zero idea that you've come up with. But this, like you just said, there's a few companies that can offer the same solution. Are you guys going to work together on this? Can you share the costs of it, or is it going to be proprietary to each of you about how you go about doing it?
I'm in pretty close contact with the CEOs of those other companies. Again, the key here is, we want to provide, the best set of investing assets for the investor base out there, because again, we feel that there aren't that many great ways to play nickel right now, and as some of the stories that are here, it's good to work together wherever possible. They've been working on certain studies on carbon capture. So, and I know FPX just announced they're working with a researcher out of BC to do some more, at-site field studies in terms of, quantifying that carbon capture rate. But again, stay tuned on that front. I would say, we are definitely in conversations. We're only a few weeks in from that announcement, and I think it would make sense, to sort of, to pool our research, and we do share, our progress on those fronts with each other when we can. Okay,
and the reason I ask is because if a company is to be seen as genuine about something such as this, which is a sort of ESG type solution, net zero is a great initiative, fantastic initiative. I know you've been approached by lots of companies, not necessarily pure mining companies, about it. So I'd certainly like to hear, how you miners are working together to come up with a better, greener solution for sure. I think it's a really big deal, not least of all because you sort of see the articles we saw this week in the Financial Times, which is a sort of financial newspaper here in the UK. I think reasonably good reputation. And sorry, did you see the article I'm about to refer to? It's starting to talk about nickel.
Yeah, no, I did.
Okay. So what was your reaction to that?
No, I think it's great. We talked about, net carbon with net zero, and in our announcement, we talked about some of the other environmental issues that are tied to some of the other other forms of production. So it's been great to see, sort of the mainstream business press really pick up on some of the key themes. Again, something like deep sea tailings was just, I can't believe that, things weren't being picked up on sooner, and getting kind of the attention that I think it deserves. And so, it's great to see these kind of publications actually writing in-depth, detailed stories, and calling out some of the individual companies. Something I can't, I certainly don't want to do, but they're in a position to be able to do that. So again, I think if that helps us as an industry end up making cleaner, greener nickel, then all of us will benefit from it.
I found it like you. I found it extraordinary that no one's going to pick up on it up until now, but it has a much bigger effect than the industry regulating itself. It needs to be publicized, because if something affects the share price, it seems to be the only time that people pay attention in this industry. We've talked before about mining needing to clean its act up somewhat. So do you welcome these sorts of articles? Are these good for business?
Well, again, I think so. In the end, I think it's interesting if you look at what's happened to cobalt, right? So, cobalt's had its artisanal issues with the Congo. That was seen as a major factor. And again, when it had its day in the sun to be able to where the price went up quite a bit, probably too fast. Well, it did go too far too fast, but in the end, people focused more on those those social environmental issues, and as a result, you just saw the EV industry is fundamentally retooling and very much accelerating their shift to lower cobalt batteries. So if you don't sort of if you are not getting your industry into a position that it can really participate in a healthy way with your downstream customers, then again, they'll eventually find a way to use something else that is more in line with their values and how they want to proceed. So I think as an industry, it's critical again that we continue to listen to the ultimate consumers of what it is we want to produce, and make sure we're producing it in a way that makes them feel good about using it. Because ultimately, if people want to use more nickel, then we'll get a chance to mine more nickel.
Okay. Someone sent in a question. We're asking a question around Voisey's Bay, right? Voisey's Bay. Yep. Is it true that the grades were sort of 2 to 4%? And if so, why aren't there more mines like this now? Because the grades that a lot of the companies, including your company, was Canada Nickel Corp, is about a tenth of that. You're sitting at 0.3, 0.4, those sorts of levels. So it's extraordinary. So where are the next big nickel mines coming from with better grades?
That is, that's the fundamental challenge facing the industry is, that Voisey's Bay was discovered in 1992. The last 1 million ton plus high grade nickel reserve that was discovered was 1992. The next best one that's been found was Nova Bollinger in 2012, which was 300,000 tons. It was 1/10 of what Voisey's Bay was, and they have to mine it underground. So your operating costs are probably close to 5 to 10 times per ton what you'd be mining at Voisey's Bay. So there are companies that are getting good multi-percent intersection. So again, those are one of the rarest commodities in the base metal space. So if any company you see finds a new discovery with multi-percent nickel in it, definitely pay attention to it. The next challenge with those type of deposits, though, is to string a resource together that is high grade enough and large enough to really make it worthwhile to develop a mine in whatever particular region you're finding those type of deposits. So the reality is, and again, the next question is, okay, why can't the existing producers just, ramp up? Well, the reality is Norilsk, Inco, Falconbridge, Vale, Glencore, and Jinchuan, most of their nickel sulfide resources several thousand feet down. And so, using the Voisey's Bay analogy, the open pits now, will be mined out here in the very near future, and they're going underground, and they're going to have to spend $1.5 billion to mine stuff at 1.5% nickel, with a mining milling cost per ton that's probably close to 10 times what they mined it at the open pit rate. So, when I talk about sort of the challenges facing the nickel industry, in terms of finding nickel, particularly outside of Indonesia, they are very real, they are very concrete, and there's not, we just need to do X and magically, 5% additional supply will come out of Canada or Australia or Russia, in the short term.
So, that's really interesting. That's really interesting. So basically, I know you said earlier, like there's room for everyone here because there just isn't enough nickel around. So, and you're competitive. You've got to be competitive as a CEO, but you genuinely believe that it's best for the industry as a whole if you all can mine economically, because we're not going to be able to meet the shortfall that's coming.
Yeah, we need, on multiple levels. Yeah, there's just fundamentally from a supply demand perspective, there's just not, again, particularly sort of cleaner, greener nickel, there's just very little of that coming down the pipe, and there's very little in general coming. And then, from an investor perspective, you need to have, as an industry, have a market cap that's large enough to make it interesting to the largest type of investors who would sort of deploy large sums of capital if you ultimately want to start building mines. So, the best thing for this industry is to have more stories come to the forefront, so that sort of investable base in the nickel market, is large enough to attract the kind of investors that we want it to help us, go right through, into production going forward. So all the stories you're seeing in terms of Chalice and Legend and Centaurus, we all need to be trying to fire on all cylinders here, to get more money into the industry as a whole. So
jurisdictional risk. Okay, because I think, again, another question sent in by someone, which was, have any of the automotive groups come in to Canada and backed any nickel plays? And I guess that comes from saying, well, Canada is surely one of the safest jurisdictions to do mining. Okay, but as we've just described today, you've talked about Brazil, you've got Vietnam, as other jurisdictions which these mines are at. But no one seems to be, that I'm aware of, stepping in and saying, I need to buy nickel at source. Yes, they're going to buy in the open market at some point. So are you aware of any groups coming into Canada and perhaps trying to sew up or capture this flow of nickel?
Well, I know, firsthand that there have been groups, coming to Canada, but the challenge is twofold. One, a big chunk, the existing production is basically tied up with, Vale and Glencore, and they don't really need any extra money from the downstream supply chain. They will bring nickel to the market when they want to. And then the issue with the other development stage projects, including ours, is typically they like to come in when the project's been largely de-risked, when you've got your final feasibility study done, or you're well down the path to having a final feasibility study done. And so there aren't any other projects that are sort of sitting at that stage right now. So I think as people get their projects closer to that goal, you will see checkbooks opening up. And again, coming back to Elon Musk and Tesla, as I said earlier, the industry needs to provide, some visibility to the market as to what their requirements are, and or start writing checks themselves, if they want the nickel to show up in time. It's either A or B if you want the nickel.
Okay, so Mark, just to round things off, if I come almost full circle here with regards to nickel price. It's much harder than you thought it would be, than anyone thought it would be at this time. Is it? And I appreciate what you said about fundamentals and momentum at the beginning, but do you feel that the price is a rather synthetic one? I mean, what's going to happen for the rest of this year?
Yeah, no, it's tricky. Again, the way to think about it is, we've now just gone over $7 a pound, and about 2 months ago we were talking about it going over $6 a pound, and I thought it was overdone at that point in time. So, as an investor there today, should you start to put money to work in the nickel space, or not? Is nickel going to go to $8, or is it going to go to $6 a pound next, right? And so, the tough part here is, again, it comes down to that triangle that I keep talking about. So again, I would encourage people to do as much research on that as possible. So it's Chinese demand, it's ore supply from the Philippines, and then it's nickel pig iron production out of Indonesia is how the corners of that triangle. Right now, all three for the last few weeks have been pointing up, and we've seen that the nickel price continue to move higher. So, what to look for if in terms of how do we get to $8 a pound? Well, what you would look to see is one, are we continuing to see ore stockpiles in China flatten or drop in advance of the October rainy season? So, if that trend continues, that's one push, moving things higher. The second thing that I would watch for is, again, if there's a surge of nickel pig iron production out of Indonesia, which again, there's a bunch of capacity coming on, through the end of the year. Again, people thought what was coming on already was going to flood the market, and it has not done that. And so, if that NPI production comes to market, where you'll see it is if you see nickel pig iron discounts can start to widen out, or stay basically flat with the current nickel price. So, we're around flat with the nickel price now, and if that continues through the end of the year to be flat with the nickel price, then again we will, that'll be push it towards $8. And then, the other piece is just in looking at terms of Chinese demand. So, we'll continue to get monthly, year-over-year Chinese 300 series stainless production. We'll get other PMI information like we're getting there, and not just from China, but now the rest of the world is starting on its recovery curve. And again, if those continues, to be, very strong numbers on a year-over-year basis, then there's, I think it'll be tough to get to $8 right now, but those are the kind of things that'll keep us above 7 and heading towards 8 between now and year end. Conversely, what would we see to see prices drop to $6 a pound? One is, we see, those Philippine ore inventories finally starting to build, because it means that the Chinese stainless industry is not starting to shrink a little bit. The growth is starting to slow down a little bit. You will see ore supply, if the Philippines can do more than people expect, that will also end up in the inventory pile. So again, if you start to see inventories build, again, a small build should be there because we need it. But if it starts to really rocket up, then that's a warning sign that, okay, maybe we're going to head back to $6 a pound here. The other thing, and again, I think this is the most likely risk, is this additional nickel pig iron production out of Indonesia. If that starts flooding into the country, and you start to see that discount really drop down, really widen out. And again, last fall when I came on, first time we talked with Canada Nickel, I said, look, at $18,000 a ton was not sustainable. There's no way we're going down to $13,000 a ton by December. And the reason I could be so emphatic about that was the gap between Indonesian NPI prices and nickel prices was $4,000 a ton. So that kind of gave you a better view of sort of where the real, physical market was trading at. So, and right now it's at zero. So we're very close to zero. So if that starts to widen out dramatically, good chance nickel prices are heading back to $6. And then again, on the Chinese demand front, that July number was a massive 17% year over year 300 series stainless production growth. If that starts trending down to 6.543%, and the demand looks like it's losing its steam, that's another one that's going to take us back down to $6. So again, I think right now, my call would be, I think ore inventories and Chinese demand will be stronger than people expect, and NPI will be stronger than people expect as well. So that we'll end up with kind of a sort of a 2-to-1, and that we will end up consolidating at a level here, somewhere around $7 before, as we cruise into year end. So that's my best guess at where the market's going to be between now and year end.
It's exciting times for mining. I mean, that paints a great picture for nickel, and if you're a nickel investor, you should, obviously great advice, great insight there from you. But the market as a whole, not just precious metals and not just base metals, but people are paying attention. You look at the FT article, although it's slightly negative aspect of it, but people looking back into mining in the way they haven't done for the last 2 or 3 years. I mean, it's only good for the industry as a whole, which has sort of struggled with funding. But there's also this, I have this nervousness about people just not quite knowing, coming in the industry, not quite knowing what they're looking for and investing in projects which perhaps aren't as strong as others. And there's, it's a bit grayer.
Yeah. No, and again, last May when we started this weekly series and we made that sort of China macro call, again, a lot of base metal stocks have gone a long way since then. But again, I would, encourage people, you haven't missed out. You have multiple legs in these types of cycles. You've just missed the first leg. The next move up higher here is, should be coming based on where we're seeing the various commodity prices are at. But, again, you're probably, at those early stage, you want the highest torque names possible, the highest cost producers. So earlier stage, because that, that sort of gives you the sort of first torque. And then what happens is it starts to trickle down to explorers. People need to find some interesting exploration development stories. And then you want to also start to look at cash flow, because as the prices are high, you as an investor want to see some of that money, come back at you. So you move up into some better quality producers, and you move into some earlier stage exploration development stories. And that's kind of where we're heading now. If you see what's happened in the gold market, there's been a bunch of financings for the exploration development stage companies. And I think, you'll see something like that evolve here over, between now and the end of the year in the base metal side as well. So.
Beautiful. Mark, great weekly run through the world of nickel with you as ever. And thank you very much. How are things going with you guys? You're obviously up in Timmins. You're looking forward to a little bit more drilling. When's the next set of information that we're going to hear from you?
Yeah, we'll have sort of weekly news here right through till the resource comes out mid-September. We're heads down on the PEA, which will be there by year end. So there'll be a bunch of engineering trade-off studies, so forth as well that'll come through over the next couple months. So again, it's very exciting times, and we're able to get access to parts of the property now that we weren't able to through the spring. So very keen to see those particular drilling results come out in the next couple of weeks here.
Fantastic. We'll catch you next week, Mark. Have a great time up there in Timmins, and thank you again for today.
Well, sir, have a great week. Take care.